All right, guys. How's everyone doing? It's 2 p.m. Put on my hat here, guys. All right, guys. Welcome, welcome, welcome. My name is Richard Berricat, guys. I am 47 years old. Yeah, so this is for those who are in their 40s, 30s, or 50s. I want to share with you my story and my journey on on how it took me 47 years to invest in dividend stocks and S&P 500 index funds. So it is never too late. I know some people might consider me a late bloomer in stock investments. It's okay, I'll accept that label. Better late than never. Um, if you don't know who I am a Nigerian-born US-based entrepreneur. I am based in Las Vegas, Nevada, United States. I have investments in Nigeria as well as the US. Just recently, I would probably say in the last couple of years, have been really focused on securities. So that's stocks and just most recently, the S&P 500 index funds. I'm going to share with you a little bit of my background and my history. Um, I grew up in Lagos, Nigeria. And throughout my upbringing, and I think this is very common too, with I can't speak of how parents or how our Nigerian parents back home are raising their kids today. But back then it was a different story. I'm talking about early 80s. I was born in 1978. So where in my family growing up, we didn't have much. Growing up as a kid, I lived with my grandfather and my mother. So my granddad on my maternal side, he had fought in the Nigerian Civil War, and then when he got out of the military, the Nigerian military, he took a job working for one of the railroads in Lagos. And my mom at the time worked for an insurance company, Crusader Insurance, in Victoria Island. On my paternal side, my grandfather had his own private practice. He was a medical doctor, had his own private practice in Akwa Ibom State, Nigeria. And my father was already in the United States attending Texas Southern University, getting his bachelor's degree in biology. And then he went on to become a forensics clinical psychologist for the state of Texas. So all throughout my childhood growing up in Nigeria, I didn't come to the US until I was 12 years old. Nobody talked positively about money. You, I don't think I heard the word stocks or investments or compounding until I was what, 18? So finances was something that was never really talked about positively growing up in Nigeria in those days. We were always taught to live poorly. I guess you can call it living within below your means or within your means. That's kind of like how we were raised in Nigeria, at least for me. So there was always this saying that my mom used to say, "Don't you know, Wayne," meaning live like a poor person. So their mindset was always lack. Okay. And there was also this saying growing up in Nigeria, and I mean, this was instilled in you as a kid growing up, that money was the root of all evil. Like it was driven and instilled in you growing up, especially at that time when I was, my family, we are, Christian faith. So going to church, it was always driven. Money is the root of all evil. Money is the root of all evil. So you were trained to live like a pauper, to live poor. And then anytime that we saw someone of status as in they dressed well, they drove a nice car, they lived in a nice house, we always, just because of the mindset, um, misdirection as a kid, we were trained to look at those people as criminals. Okay. So if you looked good and you dressed well and you had money, it was always tied to something ill-gotten, ill-gotten gains. You robbed somebody for that. You stole it. You committed some kind of crime to acquire that wealth. That was how we were taught. Although you liked that, for once you kind of want to eat something different. Maybe you've always looked at that supermarket. I'm talking about like growing up as a kid and you walk past the boutique and you realize that, man, I've been wearing the same outfit now for a week. I would like to try something else, try on a nice pair of shoes, dress nicer. We all wanted that as kids. We wanted that growing up. But it was always negatively drilled in us that wealth was bad and wealth was evil. So no one really talked about it. And then everybody around you, we lived in a compound in Surulere, big compound, maybe 30, 40, 50 families. You had some with studio apartments like we had. I mean, I shared a studio apartment with my grandfather and my mother. I recall my grandfather used to give my mom and I and my sister the bed, and then he would sleep on the mattress on the floor. That was my grandfather for you. So we grew up with literally no financial education. Nobody ever taught us how to save money. Forget about the word compounding because that didn't even exist. As I mentioned earlier, forget about investing. That did not exist in my childhood. My grandfather on my mother's side, my maternal grandfather, literally died poor. Didn't own anything. He had nothing that he passed on to his children. He died when I was younger, but I'm pretty sure he didn't have two pennies to rub together. So yes, I can say that my grandfather on my mother's side died broke. I didn't get a chance to live with my grandparents on my father's side. The little that I saw of my grandparents as a child, I was 6 years old when I didn't meet my grandmother, my paternal grandmother. Didn't get a chance to meet her because she passed away when my father was 5 years old. But I did get a chance a little bit to meet my grandfather on my dad's side from like when I was 3 years old to about 6 years old. So he died when I was six. But even at that, money wasn't money was taboo. It just wasn't something that was talked about. It wasn't something that was discussed. Investing was never ever brought up. I think the first time that I heard about stocks, I remember where I was. I was in Malibu, California. There was a lady that I was dating at the time, and her father was into real estate investments and stocks. And I remember I was probably about 26 years old, 25, 26. And I think for the first time in my life, I sat down with someone who had what I was looking for. He had the means, he had the wealth. And I recall asking him, what can I do? Like, how can I be financially independent? And I remember him telling me about stock investments. I didn't know anything about that. I don't, the most that I've seen about stocks is what reading like mutual funds magazines. And without someone there to coach you or guide you or mentor you, it can get intimidating very fast because you don't really know what you're looking at. You don't know the difference between a dividend stock or a regular stock. You don't know the difference between a mutual fund and a stock. I mean, I didn't even know what S&P 500 was. So although I broached the topic, when he mentioned it to me, yes, Rich, because at that time I had $5,000. I was 26 years old. I had disposable cash, just $5,000 sitting in my bank. And I was wondering, man, what can I do with this money? And he said, well, you know what? You can, Rich. You can invest in stocks. And I just kind of blew it off. Didn't think too much about it. And of course, what do you do at that age? You spend it, right? It's exactly what I did. Looking back at it now, we're talking about 2004, 2005. Imagine if I would have invested that $5,000 in a dividend stock or maybe even an S&P 500 index fund. What I would have today 20 years later. So all through the years, it was just something that I just didn't look into. Yes, I went on and I bought land in Nigeria. I set a little bit of money aside that vanishes ultimately. So it wasn't until this is what, 2025. It wasn't until 2023. I was 45 years old. I'm 47 now. That I started dabbling into stocks again, but this time from a seasoned perspective. Now I'm looking at things a little bit differently. As a father, as a husband, now I'm thinking about not just my future, but the future of my children and what I'm going to leave behind for my children. You get a different set of approach in your forward, like at least for me. So I started looking into stocks again in 2025, in 2023. And what really reintroduced me to it was at that time I was working in project management for Walmart. And a lot of people don't really, for the outsiders, and I can speak from an internal, I'm no longer with the company, but I can speak from someone who worked internally at the corporate level, at the management level. I was exposed to merchandising. I was exposed to stocks. I was exposed to the way how the company is part of the American fabric. And it was during my onboarding that the topic of setting aside a certain amount from my paycheck and investing that amount into into stocks came up, and I optioned for that. So every paycheck, X amount will go into my stock portfolio. And then just slowly and slowly, I started building my stock profile and building my stock portfolio with Walmart because I got a chance and I have never like stopped since. I left the company about a year ago, and then I ended up transferring my stocks to Fidelity, the brokerage company that I'm currently with. And then just slowly since I left, I've been consistently investing in Walmart stocks. And the reason why, and I'm one of those where I have a very low risk tolerance. And I don't get excited very fast. And what I mean by that is I don't really get bothered with what I would call flashy stocks. I'm not saying Nvidia is a flashy stock, but it's sort of like gained wave over the past year or so. And it seems everybody's rushing over buying Nvidia stocks, buying what I call like vanity meme stocks. This is usually how a lot of beginner stock investors get in trouble. I chose to focus on what I call a legacy dividend stock. And it doesn't get any more legacy than Walmart. I'm not saying go and invest in Walmart. That's not what I'm saying. I'm not saying go out and buy Walmart stocks. What I'm saying is it's a very safe dividend stock to own. The American population stands at 330 million, maybe a little bit less, maybe a little bit more. Did you know that 90% of the American population live within a 10-mile radius of a Walmart store? It's a fact. It's a company that is not going away anytime soon. Forget about the whole e-commerce thing with Amazon. Yes, Amazon controls a large percentage of e-commerce purchases in the United States. But when it comes to physical store, within the 90%, um, within a 10-mile radius of 90% of the American population, there is only one leader in that category, and that's Walmart Inc. I think their stock is going right now for about 102 to 105. It fluctuates. But I've been buying Walmart stock since it was what, $50 per share. So, and to be honest with you guys, that is the only dividend stock right now. I'm talking about standalone stock right now that I am invested in. Maybe sometime down the future, I'll be a little bit more bold, a little bit more confident to expand outside of individual stocks. But as of right now, Walmart is it. So what I started doing not too long ago was I started looking into the S&P 500 index funds, and I've been investing steadily in the S&P 500 as well. So for those who don't know, I'm pretty sure a lot of people out there, they are not educated in things like this. It took me 40 plus years to tell you this. And I'm not a guru now. I'm not an expert. This is not stock advice, it's not financial advice. I am just telling you guys my story and what I'm plugged into and what I'm doing at this later stage of my life. Yes, some people can look at me and say, okay, well, it started a lot late than most people. And it's okay. I'll own that. aggressively invested in stocks at 47 years old. I would take that. To me, it's better late than never. And when I look at my future in terms of where I see myself financially, I can honestly tell you that based on my goals, investing in stocks and index funds is the fastest way that I see myself getting to where I want to be financially, as far as like investments. Yes, I own some real estate assets, I own land. But with stocks and index funds, I don't have to think about these things. And I know most of my audience, I'm not talking about Nigerians, I'm talking about US stocks, US S&P 500. That's what I'm talking about. It's a collection of the best and most profitable 500 corporations in the United States. So the way that I'm looking at this, and at least what I can say gives me confidence that I'm moving in the right direction, is that I know that day out and day in, people are working to ensure that the American economy remains number one globally. And that is why where the S&P 500 index funds comes in for me. Because that investment can go into, I don't touch it, I don't handle it. The people at Fidelity are the ones that are Fidelity brokerage. You guys should probably look into that, by the way. That's the brokerage that I use. And you can invest by yourself. You don't have to have a broker. You don't necessarily need a broker. If I want to go right now and buy, I mean, at least for me, mine is scheduled. So on the first of every month, X amount goes into the S&P 500 index funds and X amount goes into Walmart. I have a little bit of just a little investment in a small company called Daktronics. It's not something that I would recommend. It's like a $14, $15 per share. I have a few shares there, but it's not really my core focus. I'm just gonna leave it and just gonna let it do its thing. But my main focus right now are the the WMC Walmart dividend stocks, currently about $102 per share, and the S&P 500 index funds. I think that's about currently about $238 per share. That is where I'm focused right now. Listen, is what works for me. And I've been doing a lot of research. I'm educating myself. Yes, as a late bloomer, every little chance that I get, I'm looking through these stocks. And based on history, and you may know more about this, and I'm open to learn. I think it's like what, a 10% return on the S&P 500 index funds. It's been that way year over year for decades. So why would you not put your money in there? For me, it's set it and forget it. I don't have to deal. It's better than me saving the money. The S&P 500 is proven and it's simple and it's steady. If I knowing what I know now, it's something that I wish I would have done in my 20s or my 30s. So that is how I'm currently investing at 47. I'm not going to beat myself up too much for being a late bloomer at this, but I can tell you that I'm actually enjoying it. Just the ability to be able to learn. And I'm not trying to trade. I'm not interested in being a stock trader or day trader. I am playing the long game. That is exactly what I'm doing. Like, where am I going to be 10, 15, 20 years from now if I consistently consistently buy index funds every month, consistently buy dividend stocks every month. I'm looking at where my future will be 10 to 15 years from now. And I'm telling you, based on the direction that we are going right now with it, it's going to be even better and brighter than the last 10, 15 years has been. So that is just what I wanted to tell you guys. It took me 47 years. I'm not ashamed of it. I'm actually proud of myself. We have a small business that's thriving. We have real estate in our portfolio. And now we have dividend stocks and also S&P 500 index funds in our portfolio. So for the gurus out there, those who are more experienced in this, how do you think that we're doing? Do you think that we are making the right decisions? Is the S&P 500 index funds the way to go? If you had to choose between dividend stocks and the S&P 500, which one would you choose and why? I'm interested in learning, and I hope that you guys can offer some tips and advice in the chat box so I can learn further. And if you grew up like me without financial guidance, many people are out there who grew up without financial guidance. Listen, your story doesn't have to end that way. You can start building your portfolio of stocks and index funds today. And then it's like the more you do it, the more you want to do it. Like ever since that we started really heavily investing, I've been studying every single day. I'm reading up on it. It's fun for me to be able to open my Fidelity brokerage app to see how my stocks are doing. And I'm telling you guys, over the past 2 years, my Walmart stocks has grown by 72%. So investing in stocks is not something that it can, like I said, it can get very intimidating, especially when you start seeing those numbers and people are throwing big words at you. But my recommendation and my advice for you is just relax, take it easy. It's all about teaching yourself. Buy one stock at a time. And I'm telling you, if I were to like reverse this and do it all over again, I would focus exclusively on the S&P 500 index funds because with that, you have all of the top companies under that umbrella. From the Googles to the Walmart is also in the S&P 500. Nvidia is there. The Magnificent Seven stocks are there. And because of this new information, my portfolio investments now is 75% S&P 500 index funds and 25% 25% dividend stocks. That is how I'm approaching my investments. Okay? So, listen, I just wanted to share that. I consider myself a very smart business person, but when it comes to like stocks, I'm a newbie and I'm looking forward to learn. And I'm happy that at 47 years old, we are moving in the right direction as far as like our retirement portfolio. Not saying I'll ever retire. I don't ever want to retire, but it just feels good knowing that every dollar that I put into it is going to compound in the future. So yes, whether you're in your 30s or you're in your 40s, 50s, 60s, it's never too late for you to get into stock investments, S&P 500, especially the S&P 500 index funds. Read upon that, study that, look into that. And you can start with as small as $50 every month automatically coming out of your checking account into your S&P 500 portfolio, as little as $50 a month, and just set it and forget it and see what happens in 5 to 10 years. Okay? So, as I get more experienced in this, I'm glad I'm launching this right now. This actually is going to be part of our ongoing segments on the podcast. As my confidence grows, it's like my first video on this topic. So yes, I'm a little bit shaky as far as like talking about it. But as my confidence grows in this stock space, I'm going to come out and share with you guys what I've learned, what I'm currently doing. And if you're just like me in your 40s and you like what I just said, you like this information, um, please like the channel. And if you absolutely love what we're about, look through our library of videos. You like what you see, you like my messaging, you like my topics. I would love if you subscribe to the channel. Uh, and then get notified when I post new content. Okay? So I'm happy with the mindset shift, guys. I'm proud of myself. All right. So thank you guys for watching. I really appreciate your time. Just want to put it out there. Looking forward to talking to you guys again, and I'll catch you at another time. All the best.